we're back in the studio.
Just wait for it.
Thank
you.
What is going on?
We are back.
Back in the studio, episode 12, we believe.
Episode 12, Master Keys, Real Estate / Success podcast. Transition is taking place.
Yep. Rebranding already.
You're here with Neal.
Chandler.
And today we have a bit of a unique episode. We're not hitting one specific topic. We're going to be going over a few different things, answering some questions that people had, and addressing some of the stuff that's in the news right now.
Yeah, we're getting some engagement, and people have follow-up questions, which is awesome. And certainly, if you have something you're wondering about, hit us up. Happy to have more content to talk about. So, but what's going on with you?
Not too much. Another eventful week.
You've always got a story.
Yeah. Nothing too crazy, honestly. I've been trying to close on those properties that I had some enviro issues on. So I'm trying to get that done this week now. It's supposed to be last week. So that's moving along. And just renovations and all the other units. My lake house is finally back up to speed. We had to do a new septic there.
Yeah, you mentioned.
So I think I mentioned it last time. That's all done. So we're finally racing through that. Concrete's coming soon. And we're getting through it. It's coming along, you know?
Good.
Firmed up. I think I firmed up on those deals last time we talked, but just getting the financing in place for those. And
yeah, it's a process, right? I mean, it's not like residential buying a single family home and in this market, like, all right, we got 7 days to do our due diligence. We're just going to fire through a quick deposit, a little home inspection, wrap up the financing, and we're good to go. What do you typically put for your commercial deals for due diligence? How long?
Again, I'm bad, so I typically go with like my 4 weeks, so I can just get my enviro banged off now.
That's quick.
Yeah, and I tend to let a lot of other things kind of fly through the cracks because I'm like, I'll figure it out. Again,
like little things like financing?
Little things like financing. I typically kind of let those things slide. The biggest thing is for me is appraisal and enviro.
Yeah.
Right? If I appraise and the enviro is good, then I'm like, I know I can close in this place because the appraisal.
Someone will lend on it.
Someone will lend on it, and I know I got my 25%. Then we're good to go. Actually,
don't do that. People who are listening, don't do that. I mean, 6 weeks at least, for the love of God.
It puts a little bit of pressure on.
Yeah.
But that's, and this is, you were asking, why do people call me sometimes with deals? And it's because I know the listing agents are like, he's going to make it super easy because he's only going to put in 2-3 weeks of conditions. He's not going to ask us for anything. And he always firms up and always somehow closes.
That's true.
So I think I make their life easy. I always tell all those guys, I tell them, I said, look, you bring me a deal, and if I sign a contract, we are going to close this thing. Like, there's no messing about, and I've kept my word on that.
Yeah, and that does carry value. I mean, I have the same thing, not maybe to that degree, because I do things a bit more conventionally with standard financing and 6-week due diligence, and really they don't start much on the financing due diligence until you have rent rolls and appraisals in. So if you're 2 weeks to get your appraisal, you're really missing that first 2 weeks. However, I kind of do my inspections and stuff like that up front. I'm like, you show me the unit, I can figure out what's going on with the building, generally speaking. So all that side of the things are smooth, and fortunately pretty bankable, got a good broker, so same sort of deal. Like if I say we're going through with it, we're going through with it.
Yeah. I've started doing sewer scopes. That's another thing I've just started looking into because some buildings will have multiple, sometimes sewer lines going out, and that can be a fairly expensive thing if you have to get into ripping and digging and tearing apart.
Yeah, I mean, I've sort of looked at it in the sense that, okay, if I'm in it for $35 a door and, you're 10 to 20 doors, you're in it for $500,000 anyway.
Yeah.
If I have to rip a sewer line for $20,000, like what, if you do that sewer scope and it comes back with tree roots in it, what are you going to do? You're going to say, I don't know, I think I'm not going to do it. Like,
instead of $3 million, I want a 2,995. 2,9995.
Dollar saved, dollar earned.
Yeah. Actually, that's some good news I got this week is I got my appraisal back on the 19 unit. And I remember if you talk about when we were talking about what we look for in a buy, I like the end value to be at least double my purchase. Mm-hmm. And my end value is more than double my purchase.
Attaboy. You're as complete. You're as complete.
Yeah, my as complete once the rentals are done.
Yeah, so what Neal's talking about there is, because you tend to finance your improvements through basically a construction loan would be the easiest way to think about it.
Mortgage plus.
Yeah, you're buying it for X price. Your goal is to have the completed project be worth double that.
Yeah.
And so you get a as complete appraisal, which is an appraiser saying, yeah, when you do all that work, it's going to be worth this. And if it's worth double, that you're happy with that. So it sounds like it came back more than that.
Yeah. Which also makes the lending, again, that helps the lending a lot because it gives you the option to go to a lot of banks and they're like, wow, he's not really hitting a crazy loan to value because there's a ton of room there. And so they're a lot more easy to work with. And when the hiccups happen, and if they do happen, more likely than not, if you need to borrow an extra $100K, there's usually a bit of room there to do so, which is nice.
Speaking of, I can't remember if we talked about this on air or off air, but I was getting my appraisals back and he told me my rents are too low. Did we talk about this on air?
I don't know if we talked about it on air, but I did hear about it. We did? Tanner says we did.
Okay. Yeah, so I won't rehash that. But I got those to a number that I was comfortable with. But the reality is I'm just not going to be able to pull out as much equity as I hoped. I'm probably down like 300 grand of equity that I hope to pull out, which isn't a deal breaker or anything like that. But it's kind of a bummer. More money is better than less money. Yeah. But I did get all the appraisals back, and I had really nice upswings on the land. Land is tricky. We haven't talked a lot about land on here, and maybe we'll do an episode on that.
Yeah.
Land is really hard to finance up front.
Big time.
It is very speculative. You have to carry it for a long time. However, there can be really nice lifts on it if you buy it for the value of what it is. Say there's a house on a lot, and it's worth such and such by direct comparison approach, as we talked about when you're just comparing it to other homes in the area. But as then a redeveloped site, if you go through a planning process or if you just know what the as of right there and change it from a residential appraisal, a residential valuation to a commercial multi-unit, you can get some big lifts there. And so I had a site that I bought 2 properties that were around, I think combined I was right around $1 million, and that came back I think at 2.7.
Nice.
Based on just a really preliminary massing study of, okay, how much buildable square footage do you have there? And then another site that I think I paid, because I've had it for a few years now, I paid around $400, and it came back at $2 million. So like
Nice
those are really
work.
good land lifts. Now I have to carry these properties, and the former has tenants that cover everything. The latter has no tenants at all. Like I made a community garden. But it's a nice lift there because that improves my net worth. So when I want to go and get bankable on something else, I've got a lot of net worth behind me, and I'm going to build on those sites eventually. And that land value will serve as part of the equity to build the building. Because when they say, well, this building is going to be worth $15 million, what can you put in? It's like, well, I already got $1.5 million in the land. So there's my first 10%.
Yeah.
Now I need to come up with another 15 or something like that. Yeah. That's a simplified explanation, but
It's huge. It plays in, especially even when you're going with CMHC and things like that. They will consider that very highly.
Net worth matters. Yeah. And
net worth
they want to see
matters,
it.
and the value in the land.
Yeah.
When you do your financing and they're offering you whatever it is, 85% financing construction, that includes the land value. Mm-hmm. So you can kind of work it sometimes that you can get very close to having a good portion of your construction covered.
And that's precisely what I'm doing. Once I have everything locked in on the 60-odd units that I'm building in the spring, I'll show people exactly where all the equity came from. And but the hope is to put as little cash out of my pocket down on it as possible, but just show a lot of it in the equity in the land.
100%.
Yeah. So that's kind of.
I also want to just mention that we have a new guest.
Yeah. I was trying to think of this poem, and if someone knows this, there's going to be some poetry majors out there where it's like the rat becomes the unit of currency, and it was in Don DeLillo.
He was talking about how broken my generation is, and
no, that was a different conversation. Yeah. Ever see Cosmopolis, Don DeLillo? Like it's a movie, but it's a book.
Just told you.
You know the guy from what's the vampire thing?
I just told you what type of media I consume, and you're asking me that question.
That's true. We're not watching
I'm so ashamed
things.
I won't even say it on here.
Yeah, but anyway, what else is going on? Oh.
Not much. So I was going to say just a quick reference of why there's a rat on the table.
Splinter.
Holding a money symbol. We discussed it in the previous one, the giant rat that came out of one of my buildings.
Oh,
that my guys, it was one of the very first episodes. Anyways, instead of getting the real rat stuffed and brought onto the table, we've decided to use a plush rat and in place of him.
How's that for size? I've seen rats close to that big.
I would say I think he's a little smaller than the real one.
Gross.
So just keep that in mind.
That's disgusting.
For scale.
You know what? The resemblance is striking. Can we get that side by side again?
Oh, no, okay. No. We're editing that out.
Whoa. Oh, man.
I held the rat against my head, and that's what he had to say. No way.
Next time you're in the newspaper, I'm going to send that image. Say, as provided. Yeah. Pictured here.
Okay. So that's a great time to transition into what happened in Halifax this week.
Yeah.
And so obviously everyone's aware of the fact that we have some housing issues, major housing issues, and we've had recently the issues with the tents in public spaces, and we went through kind of a removal process. Obviously the tents came back because the issue wasn't fully resolved. I saw all sorts of different news articles explaining that people were in hotels and different options, but then they got booted out of those after a few weeks. And so we actually have on Chebucto Road, I think this is it, Meagher's Park. There is quite a dense population of tents there now. I don't know if there's other locations, But
There are
anyways,
a few other locations for sure.
yeah.
There's one down at the bottom of South Street,
here we go.
near, if anyone knows down South Street where the bridge is, kind of south end Oxford. There's a little encampment there. I can't think of others offhand, but there's certainly some around.
It's come back because the issue wasn't resolved effectively.
Yeah, and definitely. Well, we spoke about this at the time. I talked a lot about the fact that there were alternative accommodations, and some people did not have the information or did not like those other accommodations. And that information came from council, and since then they've walked that back a bit. So I'm doing the same in return, I guess. If anyone here, like my counselor, Sam Austin, I think is the best counselor in the city. He and Way Mason are kind of exactly what you hope for, Way over in Halifax, for your public representatives, like truly public service people who I just think the world of. I think they're phenomenal. But Sam writes a really fantastic blog where he essentially unpacks all of council's decisions, how he voted, why he voted how he did. And he flat out in his most recent, what do you call it, issue of his blog? I don't know. What do you call blog episodes? Posts or something? Yeah, okay. He said, they as council relied on information about the availability of alternative units, and it turned out that information was incorrect. So, they do feel like they were well-intentioned and they acted on the information they had, but that information was not right. I'm paraphrasing, but he said that the information they had wasn't wrong, and this is why they've now taken these new approaches and are providing new stock, which is also something I was adamant about. This is not going to change from the private sector. This has nothing to do about new construction developers building something. For these individuals, the government is going to have to intervene. And interestingly, this came from municipal level, like the councillors, Halifax, who does not have a housing mandate. Who do not have a housing mandate. They went out and did this of their own accord and are now hoping that the provincial government will step in to support with some of the funds. So what are they working on?
Yeah, so I mean, with that, they went into getting some modular homes, I guess you would call them, or modular units.
Yeah.
Which is, I know everyone thinks of trailers, and I suspect they might look like that even.
Yeah, totally do.
But nowadays they can make them quite a bit nicer, and the interiors are usually quite nice, and they've come a long way, I think, since what people assume when I'd say the context of trailer goes up. But anyways, modular home housing units, they are buying 24 units, which it gives you a bedroom and a private bathroom.
Yeah, it'll be hard for people to see here on the screen. I mean, you could look at this. You can find this online if you go to either Sam's site or Way Mason's site.
Yeah.
And to speak to modular and prefab are, I think, kind of the way of the future. You and I can talk about this at a certain episode.
Yeah.
They're very well built. And part of the benefit is they are built in a factory the exact same every single time.
Climate controlled.
Never exposed to the elements.
Yeah.
And rigorously inspected for code that's inspected once and then replicated over and over and over again.
Yeah.
These models, I think, are probably similar. I saw people commenting this online too. If you're working out west, you know how they have those campsites out west and they bang these things out?
Yep.
It's certainly tight in terms of the number of people in there.
They're not huge spaces, but they're not bad. You have a room, a desk, and a private bathroom with a stand-up shower and a vanity. Mm-hmm. The one thing that I'm kind of confused with is they're buying 24, but it says it's and then they show a layout for 6 rooms in one, or 8 rooms, in one, and then they say it's only going to house 73 people. So I guess there's going to be a bunch of them that are like shared space, kitchen space.
Yeah, I think they'll probably, some of that also might be COVID. It might be, couple situations and stuff like that. I'm sure there's rationale behind that.
It says here, the majority of the 24 units will have 3 to 4 bedrooms.
Right. So this is kind of a
few of them will solely do laundry, and a few of them will just be kitchens.
Mm-hmm.
All the bedrooms will include a single bed, a mattress, a desk with a drawer, a walk-in closet, a private bathroom, sink, toilet, mirror, and shower. I mean, these will be a big upgrade. These will definitely be a big upgrade, and it's a step in the right direction for sure.
Also, I like the idea with the modular is that they are movable. I mean, this is permanent in the sense that they're year-round, they're insulated, they have running water and electrical, all these niceties, and they're safe. At the same time, they don't have to be a permanent thing because there's been some concern with the residents in the area. The logical question is like, well, where are these going to go? And is this going to be a permanent thing? And I think they're still looking at where these can go long term. But now they will have the supply in these emergency circumstances to provide to people.
Exactly. Because that's the other thing, realistically, you can't put up an apartment building or any building in a short period of time. Like it's going to take 12, 16 months.
Now,
So-
even these are hard to get right now.
True.
Because one of the programs, we talked a lot about the federal government and some of the housing initiatives they were rolling out. The Liberals who won had a big spending allowance for homes for Indigenous communities. And what are they building? These. Not this floor plan, but prefab modular units. So the Kent Homes of the world are going to have this backlog of a production line. So they were able to get their hands on these pretty quickly. They probably modified existing stock somehow, but they are great in turnaround times. I think it's going to be a big industry.
Oh, 100%. I think the one big thing with these that concerns me is, and I feel like it's always what happens, is they'll go out, they'll buy these, they'll plunk them all in a location, and they'll do little to no upkeep. Mm-hmm. And then it just turns it gets low.
Grimy?
It gets grimy. You know what I mean? Like the grass won't be mowed. They won't make any effort to put in like driveways or anything like that. They're like, well, they're not going to be driving there. Yeah, but they might have people dropping them off or a cab dropping them off or whatever. And so then it turns into this really. So I think the big thing is it's good that they're doing this, but then I hope that they make an effort to also keep the spaces in reasonable condition. You know what I mean? Like I forget. I should have done more research on it, but there's the one country, I forget what it was, that does such a great job with their affordable housing. And they said the reason it doesn't feel like we have an issue with affordable housing or we don't have like these slummy neighborhoods is because we put affordable housing in every neighborhood and we upkeep the buildings as just as nice as all the other ones. And so from the outside, it's like there's no different. Even on the inside, within the hallways and everything, everything's great. So
yeah, I mean, what do they say about necessity being the mother of invention? It's sad that we're in a situation where these were necessary, but they were, and then now we have them. And learning how to properly manage them is going to be the next necessity. Yeah. I know that with the Grey Arena, which is kind of an old hockey arena in North End Dartmouth that is also being used for temporary accommodations to varying degree of success so far. There was a lot of pushback at a community meeting the other day from local residents who were like, I'm not comfortable with this being here. And I understand that a lot of people will jump to, that's the whole NIMBY attitude, not in my backyard. But there's other people who are, there are issues associated with these encampments and some of the individuals in mental health and drug use and all these things where residents are going to not necessarily be on board for that being in their neighborhood without a clear-cut plan as to how it's going to be managed.
Agreed. Yep. Yeah, I 100% agree. I think to what you said about this, there's there's obviously people who might have health issues, drug issues, whatever they might be. You go into the most expensive neighborhoods in the city and there's still those people are going to be there.
Totally.
So again, if they make an effort, like you're saying, to manage and maintain what they're establishing, I think it'll become less of a thing where people are the NIMBY, the not in my backyard concept will start to kind of fade because people are like, even if they put it there, it didn't really impact the amount of population of people that we're having issues with, and they keep it in a really good condition. So it's no longer like, you know what I mean?
Totally. I mean, no one complains about there being a hospital in their neighborhood. If you start looking at these things as a social welfare situation where we're doing this to be a better society, I think, and it's run well, people will be on board for that. I think part of the residents of Dartmouth, the reason they were maybe not upset is they maybe felt like, oh, so you just kind of looked at the map and you decided North End Dartmouth of all places? Because historically, North End Dartmouth has had a bit of a rougher go.
Yeah.
It was arguably like underserviced for a period of time. It was lower income. There was a lot of crime there. And that area has dramatically improved.
Yep.
And I think they sort of felt a little bit maybe slighted that of all the neighborhoods in town, like, why did you choose here? But it's a really convenient location for accessibility, the bridges.
Yeah.
So anyway,
even land availability.
100% true. So that's in the news. What else is going on?
I mean, that was the big one in the news for recently in Halifax we wanted to go over. We wanted to talk and answer some questions because we've been so aggressively asking people to comment, and now we've gotten some comments.
Finally, some people took the bait.
Actually, you know what? I lied to you. Maybe we haven't talked to CMHC.
Well, do we want to start with that? Because someone asked about the CMHC, so we want to do that as one of our last questions.
Yeah, maybe we'll do that. But yeah, so we've been asking you guys to give some questions and some feedback, and thank you everyone so much for listening. We're actually starting to have a few listeners, and lots of you guys are starting to give us some feedback, whether it's email, DMs, comments, whatever it is. We love it all. We're reading them all, trying to respond to as many as possible. So we have a few ones that we want to go after today and try and get back some answers. I think these are some questions that people, more than one person probably is thinking.
Yeah, so one of the questions was about the cap rate, and Willina wrote the cap rates do not measure returns. Think about this example and answer my question. A seller in a 10% cap rate market has $100,000 net operating income. He can sell that for $1 million. right? $1 million is $100,000 net operating income, a 10% cap. But in a 5% cap rate market, a seller with $100,000 net operating income can sell their property for $2 million. So how can twice the return sell for half the price? And they say, I guarantee you cannot answer that question.
Directing this at Chandler because he did the cap rate explanation.
Neal's passing on this question. I mean, it's a
have
hard question to answer because it's a very confusing proposition. I think there's a bit of misunderstanding there. So what they're saying is that cap rates come from an income approach where you need the probable market value and then the cap rate of return. And I think some of the confusion was we were looking at how you can reverse engineer these things. It's right that if there's $1 million asset and it yields $10,000 or $100,000 of net operating income, that is a 10% cap. And in another area, the cap rate, if it's a $2 million property, it's a 5% cap. I don't really understand how they're saying, well, how can you get something sell for you get twice the return for half the price. I think they're just kind of misconstruing how the reverse
cap rate
was
is
sort
utilized.
of set up. Yeah, so I wish we could answer that question. Maybe Willina will comment again with some clarity. But effectively, the cap rate is your return on a given asset, and you have two different assets in a given area. They may offer a different return. So I don't understand how the net profit on an asset couldn't be seen as a rate of return. But so that was one question.
I think maybe we'll hold Ben to the next one. Yes, Calvin.
Calvin is a buddy of ours, or I guess of yours, but I think he sells real estate in the Valley, is it?
Yeah, he's with Remax Banner in the Valley.
Right on. He had a question about, or not even a question, he was just remarking how he used that CMHC down payment matching that we had talked about briefly, just sort of passed over. He gave an example of where he used it, and it was great. So we're going to revisit that in a future episode where we talk about residential financing. The interesting thing he asked about, what do you guys think about the PC's idea to increase property taxes and de-transfer taxes on Ottawa province owners? He read this on their website prior to election. I haven't heard much since. Have you heard anything about that, Neal?
I haven't heard too much. But yeah, the general idea of the PCs increasing property taxes and de-transfer on out-of-town buyers, I don't like these ideas. In general, all the foreign buyer things, I'm not a huge fan of for a bunch of reasons. Like the number one for me also is like, again, in our most foreign buyer markets, it's like a 3 to 5% ratio that are buying. In Atlantic Canada, it's like 0.5%.
Yeah.
So it's like 1 in every 200 people maybe is a foreign buyer. I don't think it's good though to make it so intensely difficult to come in. But you know what? Maybe on the flip side, like you look at it, Canada makes a huge effort to be a really strong country for so many different reasons that we are considered to be a bit higher end. And so if you want to come here, you kind of have to pay the price to do so, and we can kind of capitalize on that versus trying to have to capitalize on people that already live here and are part of the current country. But I don't know. I'm just never a big fan of like making these separate targeted fees and taxes for certain people and then not for others, because I feel like it gives you an unequal playing field. But I guess on the flip side, I understand that they make a huge effort to make this country the way it was, and then for people moving here, it's a benefit for them. And so if they really want to be here, then we do that. I think these things come more from the idea of like it's popular opinion for people to be like, got outbid by a foreign buyer on this house, and now I ruined it. And so then that becomes common verbiage,
easy
and then easy scapegoating, and they then the government just throws it in there to kind of appease people, like, they're also going to deal with the foreign buyers, like they're going to slow them down.
Yeah, it's amazing how things become so commonplace in their narrative that people start to believe them without ever questioning it. I mean, there was someone posted the other day on Facebook, and this is digression, but someone's like, I can't believe, the tax breaks given to the rich and so on. If we just tax them more, we'd have all this money and blah, blah, blah. People are like, yeah, tax them. They don't pay their share, blah, blah. It's like, well, the top 1% of earners in Canada make about 10% of all income.
Yeah.
Right? So they make a disproportionate amount of income. But they also pay about 15% of the total tax. So they are technically paying more than their share. Like they're not paying their share, only in that they're paying more than their share. Mm-hmm. And whether or not they should still be paying more than that is another question. But this idea that high-income earners aren't paying the same rate is again only not true, and that they're paying more than everyone else. So this is another thing, like people are blaming foreign investment for these rising prices, but I don't think that's accurate, especially not here in Nova Scotia. The other issue I had with this is de-transfer, and a lot of property taxes, a municipal revenue stream and municipally set. So the provincial government coming in here and saying, all right, we're going to add this on top of your municipal taxes. I can't imagine the municipalities loving that. I also think there are certain municipalities in the province that are actively trying to encourage outside investment.
Yeah.
And this may be counterintuitive to that. But another one, AJ wrote.
AJ
You got
Brown.
that one?
Would love to know more about what type or what size of projects you guys get involved with. I mean, I'll speak for myself first. We kind of discussed it, I think, more recently in one of our last episodes. But for me now, I would say I'm getting involved in, I'd say, double digits minimum sort of thing. Like I'd like to be 10 plus units if I'm buying an existing structure. And hopefully if I'm building, I'd like to be around the 50 units for the first one. And I quickly, as quick as possible, get to 100 plus units per transaction sort of thing, whether I'm buying or building. But yeah, so right now it literally started with single family homes, went to duplex, triplex, then I went to 6 units, 11 units, 12s, 19s. It's a very like normal progression kind of through the steps of size. It's very difficult to kind of jump the steps unless you have cash from somewhere else or a ton of equity for some reason. Even like going at the progression necessarily that I had, I got fortunate because of the timing. Jumping those steps can be kind of difficult, and time's your friend. I'd say more it's difficult if you're trying to do it all in 2 or 3 years, but if you do it in progression, like okay, over 10, 15 years, if you put together 50 units, to then jump into a single 50 unit building after 15 years is not out of this world because you'll have all the equity built up that will allow you to make that next step. But yeah, so my current size, like I said, I have around 80 units once I close these next few. And then I'd like to start getting into building some new stuff around maybe 50 to 60 units per project.
Yeah, I think you kind of covered it all there. I think the easiest thing is we're not really looking at duplexes or triplexes or 4 units anymore unless there's some sort of land play associated with that.
Yeah.
Obviously, double digits for the multis is great. It just makes your life so much easier. They're easier to lift and they're easier to refinance and all the things that we've kind of covered in previous episodes. I think we're both sort of trying to focus a bit more on the new construction side of things.
Yeah.
So the permits that I've got started for around 60 units in downtown. It's going to be my biggest building, and it's also going to be sort of the scale that, like Neal talked to. I like the idea of building anywhere between like 40 and 60. I think that's a really sweet number. It's a manageable size product. They're also easy to sell if you ever want to sell the project because not everyone can do 100 doors.
Yeah.
So that's kind of where I guess we are and aspire to be. Why aren't you buying, this is a question from Tyler, why aren't you buying one of the many vacant buildings in Truro versus building new? I actually was curious about this question because I'm like, what vacant buildings are there in Truro?
Yeah.
I'll be honest, I don't spend a lot of time in Truro. This was a particular opportunity that came across my desk, and it was a situation where I would not have bought the property otherwise. Like it's a 6-unit building. I wouldn't have bought that normally except for the fact that there was an underlying land play where it could be redeveloped into a multi-unit building. And as a result, have that giant lift that I talked about at the start of the episode here when I was talking about land plays and getting a development agreement. And the beautiful thing is when you buy a residential building, you can finance it a lot easier than you can land. So that was kind of a perfect situation. If there's vacant buildings in Truro, I'd be curious as to what they are. Slide into the DMs to send me these vacant buildings in Truro because they wouldn't be multi-unit vacant buildings.
Yeah.
So maybe there's a question there about converting some commercial space.
Yeah.
I think there's going to be a lot of financing and creative funding coming for that down the road because there's a lot of talk, again, in those federal platforms about converting existing vacant commercial space. And I've seen a couple in Halifax where guys were buying these buildings with the plan to convert them internally to be residential.
Yeah.
I think you have to figure out what your niche is, and certainly if there was an end play there, I'd be interested in doing it, but I can't speak to that specifically.
Yeah. I mean, I haven't looked at Truro too much. I have kind of explored a little bit outside of the city. I was trying to make a play in Kentville there for a while.
I was talking about Kentville just today.
Yeah. For me, I'm just a little bit concerned almost about the end values on these where building costs are through the roof. I know there's people building a lot in Truro. There's people building a lot in Kentville. They're good markets. I just don't know how insane the demand is because it's not something that I'm local to. And as terrible as it sounds, I'm a little bit jaded because I feel like I know these towns like from 10 years ago. And so I just can't imagine going and dropping a brand new building in some of these locations and get the rents that I need to cover the cost, right?
Yeah, this is always the big question. Like I think there's something like 1,000 approved units floating out there in Truro just right now. And there's going to be probably another 500 by the time this year ends.
Yeah.
And so do we think that there's, that market can absorb 400 brand new units? Sure.
Yeah.
Can they absorb 800? Well, okay, maybe. Can they absorb 1,500? These are things that'll be determined over the next little while.
Yeah, and I'm sure it will. You look at our migration numbers; they're crazy. But what's funny is I look at what I'm saying to that is the same thing that people said to me when I started buying some of the locations that I bought in within the city.
That's what I was gonna put you on blast for that. We're like, I think about those 10 years ago. Like, what about Spryfield 10 years ago, man? Like,
yeah, even 5
looks like
years
a genius
ago.
in hindsight. Yeah.
100%. And so, but I didn't know any different because when I got into real estate, Spryfield had already started all this new construction and all these new things were happening. And so I could see the light and I wasn't really jaded because I didn't know it from before.
Yeah. And a lot of thing is, though, like, do what you know, right?
Yeah.
I'm always just, if you're going to invest somewhere that you don't know, do your research, get a team involved that knows that area because
I struggle to see how they can get the end value numbers out of these buildings and these places.
Well, the cost of construction is less there. I know we're saying, it's the same price wherever you build it. In those areas, you can do more above ground parking, right, which lowers your cost per door by probably $25,000.
Yeah.
Right? You've got a sprawling enough space that you're going wood construction as opposed to concrete. And even though wood's been really expensive, you're still looking at a cheaper product down there. So you probably save 10% on building costs. So you put those together, that's 20% less.
Yeah.
Right? I think there's a model there.
I mean, there must be because obviously there's a ton of people going in for permitting. There's tons of people building it. So I'm sure there is. I guess it concerns me. And I mean, this is something that we'll talk about probably at the end of this episode, just in general, new construction and these high rents, where I have some concern and why I haven't necessarily pushed really hard to get started on one.
Oh, yeah. Neal's
yeah.
doom and gloom. Speaking of doom and gloom, the last Gen S was sort of asking, well, what do you think of all the news? This was probably in response to our episode about the bubble and or whether or not there was one. Our position was that, not really. There's some things going on, but nothing resembling a bubble. But CMHC released their most recent report and changed the risk from the Canadian market from moderate to high. And that included an assessment of our market here in Halifax switching from moderate to high risk as well. Neal, what do you think?
Well, I'm first going to say that there's only 3 levels, by the way. There's low, moderate, and high. Again, I don't know who can see what's on the screen. You can see all the different markets that they looked at. It's basically all the capital cities. So yeah, there's low, moderate, and high. They have done this before with Halifax. CMHC's always had a very weird outlook on Halifax. And I think for the simple fact that they don't have a lot of people on the ground here. And it is a weird market to look at from the outside. The number one thing I think that caused them to say that is they said that the price increases and sale prices that are going on are outpacing kind of the household threshold. So, and they labeled that as the fundamental housing price. So they define the fundamental housing price as what a household should be able to afford based on average expenses and average incomes and things like that.
This goes back to our 35% of gross household income, what we talked about in a previous episode.
Exactly, 100%. And so like that's like their big item. I think it's kind of funny. Like, so they have 4 metrics that they use to combine to give you market vulnerability. And the first one is overheating, and they say that's moderate. Price acceleration, they consider it moderate. Overvaluations, they say, are moderate. And excess inventory, they say, is low.
Which means there's a shortage.
That means there's a shortage of housing. So honestly, overall, the average is slightly lower than moderate. But then when they combine them all, somehow the market vulnerability goes too high. So I'm not 100% sure how that happens. The only
some
real...
of its parts, Neal. Some of its parts.
Yeah.
Right? Something's the sum of its parts.
I
get that a little bit.
Some of its parts. So, I mean... A little bit, but then, I think the biggest one that kind of stuck out to me is that they said the fundamental housing price is being outpaced. But I kind of disagree. And I mean, I think a lot of people are going to give me flack on this. Yeah, incomes aren't necessarily flying up directly immediately as fast because you're looking, let's say you're on a salary and this year you're making 50 and next year you're only going to make 51 or 5,700 or something. But on average for new positions, I would tend to agree or believe that our average wages have gone up by a lot. Like maybe not exactly the 30% like the housing market, but pretty darn close. And I mean, the proof is like Amazon's here now. They're trying to hire. They started their hiring at $15. They couldn't get anyone. $16. I think they're going to like $18 now. So that's 20%. And I mean, that's on the low end, but it's the same with all the professional jobs. You're seeing them having to continuously uptick the offerings to get people on board. All the trades, you used to be able to hire trades at $20, $21, $22 an hour. Now you can't get any good trades under 27, 28, 30, 34. Like I know people working $34 an hour. That's a 70K plus year position now. So I don't know. I think, but it's like everything. Like I think that's going to lag a little bit, right? Like you're going to see that chart showing the wage increases. That's going to take a year or two to really show up. And so they're seeing these house prices go up, and they're not seeing necessarily the wage increase immediately to follow. Additionally, not a lot, but a bunch of the people too that have come here that are buying recently, like the 5,000 that moved in from Ontario. I think it was just this quarter. Was it 5,000 people? I think.
Yeah, I heard some. I don't know the exact number, but yeah.
Yeah, well, of those 5,000, I'd be willing to bet 50% of them are still getting paid in Ontario.
Yep.
Like I know of all of my Ontario clients are moving here with a job still in Ontario, working from home and going back and forth. So our numbers don't show anything great, but they're making 125K a year, and they're living here.
Well, this is the funny thing about numbers. If you scroll up here for a second, Tanner, look at this on the right-hand side. Evidence of price acceleration detected. House prices increased in 2021 following on their growth in the second half of 2020. House prices increased. Yeah, kind of an odd sentence. Year-to-date average MLS price of a single-family house in Dartmouth has grown by 28%. On the peninsula, by 76%. So,
What?
that's not accurate.
That doesn't make any sense.
Yeah. That's not accurate. Obviously, you've got some outliers here that have skewed this data, and this is what happens when you have smaller sample sizes. Like we just know factually that number is not correct. So sometimes you need to be wary about what has been, sampled to get those results. Obviously, you throw a bunch of new construction that takes up a disproportionate amount of the sample size, and you're going to get oddities like that. I think it's also worth noting that, as you can see on the other side, this is the same rating we got back in March. So I can understand Jen's question and concern bringing it up right now because it's recent and it's in the news. But this is also the rating we got back in March, is that we are the risk is high in this current market. The market is vulnerable. Whether or not you agree with that's another question, but this isn't a change since March. The other thing, and I don't see it here anywhere in particular, but in reading articles and reading this report, they said the average house price in Canada had now risen to around 760,000.
760, 77.
Something like that.
767 or something like that.
Which is a lot of money.
Yep.
And it's skewed by these major markets that they're here sampling from.
Way
right?
higher than our average.
Yeah. Our average is somewhere in the mid-fives. So I'm not saying the mid-fives is affordable, mid-upper fives, 580, something like that. Is that where we're?
It's lower fives,
Really? Yeah.
I think.
Okay.
But I will say mid-fives around there. Yeah.
So I guess the question we need to ask ourselves in Halifax is, well, are we a below average priced market?
Yeah.
I would say we're not. And that means technically we kind of have room to grow before we're pushing on that threshold of, because if you look at these regions that they sample, Victoria, Vancouver, Edmonton, Calgary, Saskatoon, Regina, Winnipeg, Hamilton, Toronto, Ottawa, Montreal, Quebec, Moncton, and Halifax, the reason they sample these is because those are the major markets, which in theory means they can be substituted from one another. If you don't like your situation in Ottawa, you could potentially move to Halifax and have a similar city lifestyle. So we are at the low end of the average across this spectrum. I would argue that we still have some room to grow before we're going to be pushing the limits of what this market will support.
I tend to agree. The big one for me when I start to really get a little bit concerned is like, especially on the new construction side, because that's where I find the prices get a little bit crazy quick, is when it gets to the point where they're building a bazillion brand new houses and they could technically sell them for less than the other ones they're selling for. Right? Like, so for example, a new construction one today in West Bedford firmed up for $1 million. That sold for 600 2 years ago. They had done nothing to it, just a brand new house. Actually, it sold for 800 at the start of this year, and it resold today for $1 million. But could someone go in that neighborhood, buy that lot, build that exact same house for sub $1 million? Actually, I think they could. And that's where I get concerned, because I'm like, okay, so if the builders were to start ripping through it, there could be some issue there, because then that's when you get that point of like, okay, now there's an oversupply. But we're so far gone on our excess inventory.
Exactly.
That it'd be a long time to get to that turning point. Especially like also what they said, like Clayton Developments ran out of land, which hasn't happened in 160 years, and they are now out of building lots. So it's not like this is going to be an issue that's going to necessarily pop up for us. So again, to kind of reaffirm that I'm not overly concerned. But
it's also dive into the numbers here, because another one of the indicators that they were talking about, oh my gosh, things might be slowing down here, is that the number of new housing starts are down. Well, if there's no land and the builders are so backlogged, how are they going to go out there and asking for new permits and new housing starts?
Yeah.
They can't do it. So is that a reflection of the market slowing down or the market being so damn hot that we're sold out everywhere? So you can take that data and decide what you want it to suggest to you about the market. I think the fact that housing starts and permits are down is reflective of the fact that, oh my gosh, land is so rare that we can't build homes fast enough, which doesn't mean the market's going to slow down. No. I understand your point, though, and we were talking about substitution when we talked about an assessment of the market in a previous episode. The areas where I'm most concerned about market vulnerability is when you are out buying a standardized product in an outside peripheral area.
Yeah.
Because if people can substitute something else for it, be it a different home that's the exact same or a new home that's cheaper, yeah, you might have a problem on your hands. Those are the areas that I do think could be vulnerable, but I don't think they're there yet. I think they...
No, and again, that's where I'm at. I'm saying I don't think we're there yet. I think our prices are touching on that. But at the same time, we have no land availability, so that cranks the value of land up. And we have no builder availability, which cranks the cost of construction up. So maybe they're not.
You felt we were still going to go like this until the spring. Do you still feel that way?
No, I never. I'm thinking
Tanner, bring up the tape.
God, I ran to bring up the old tape. I don't think prices are going to maintain to increase. I think we're going to have still. I think we're going to slow down on the price increase. I don't think it makes sense that we continue to price up and price up and price up. I think there's still room to grow, but I think at a much more reasonable. Like I don't think
we're going to have to check the receipts.
We are going to have to check the receipts for sure. I don't think I said that. I think I may have said. I did take some heat from one of the listeners about this. I think there's room for prices to increase, but not at this pace of 30% over year.
Totally. Yeah. I totally agree. Yeah.
And I think the growth is going to maintain consistent for a long time, like many years to come. And our turnover and our inventory is going to stay low. But again, I don't think it's going to be or like 76%. I don't think we can hit 76% year over year. I'm not sure what blew. They must have included like multi-units. That's what it is. It must be like the big multis that get listed because a bunch of big multis sold this year.
Totally. That's obviously
our million plus multis never used to sell. And this last year we've sold like multiple $2-3 million properties on the peninsula, which you'd never see before.
Yeah, and we just designated a bunch of streets as corridor where all of a sudden a home that was worth $500,000 is now worth $1 million. Like so, there's some. Yeah. There's nuance to this stuff that doesn't come out in the wash. I think the takeaways for this from me, just in returning to the question.
Yeah.
One, it's the same rating we got in March.
Yeah.
Two, we're still almost $200,000 below the national average.
Yeah.
And three, I think if you delve into some of the nuances of what they're assessing here, I don't think they all hold water. Also, CMHC has a big. This is going to be coming from my perspective. CMHC likes the idea of rental. CMHC is pro rental from a. They think that more Canadian citizens should be renting and not buying their homes. They don't come out and say that, but that's kind of been a lot to do with their mandate. And I remember because they had a CMHC person here speak to our office, I think it was in 2020 or 2019, I can't remember, but at some point they were projecting a 4 to 6% drop in the Halifax market. Yeah. And I had to explain this to a bunch of people who were like, oh, well, this happened. And we had a 10% increase. Yeah. And they said in our office, like, anyone have any questions for CMHC? It's like, yeah, ask them why they were off by 16%. And that's not a normal margin of error. And I'm not trying to be hard on them. Like, they're great and it's an imperfect science. But you can read from a lot of these what you want. If you're waiting for the market to stall and get a smoking deal, I don't see it.
I love how Chandler always does his little bit of political, just cover my bases.
And then I walk it back a little bit. Just like, okay, I love them. They're great, but they're
the
wrong,
best
man.
As I apply for my CMHC takeouts.
I will take that funding, CMHC.
But I mean, just to put CMHC on blast. But no, yeah, I think they've made some really inaccurate assessments. And it is a super hard thing to totally gain on. But like, they have an understanding of who's moving here, what the targets are for immigration, all the policies. There should be a little bit more idea, kind of be able to look forward, because this is like the weather. Like they're just, it's completely, sometimes they hit and sometimes they're completely way off.
Yeah, also I go through this list here, okay? Victoria, we shouldn't be as expensive as Victoria. We shouldn't be as expensive as Vancouver, Edmonton, or Calgary. Should we be as expensive or more or less expensive than Saskatoon?
More.
Regina?
More.
Winnipeg?
More.
Hamilton?
Debatable.
You've ever been to Hamilton? We should be more. Okay. No offense, Hamilton. No, but that's a suburb of Toronto. Whatever. Yeah. That should be par. Toronto, we're going to be less than. Ottawa?
Less.
Montreal?
Less.
Quebec?
More. General Quebec?
Moncton?
More.
Yeah. So those are the big markets. We should be somewhere in the middle of them.
Yeah.
And we're $200,000 less than the average cross country.
Yeah.
So I hate to say this, I think we're still going to go up a little bit more.
Yeah. No, I tend to agree.
So there you go, Jen. There's your answer to your question. We had one other question.
Yeah, we did have one more question. So from Ben, he said he enjoyed all 9 episodes.
Aw, Ben.
Ben's our guy. But he said, I'd like to know more about how you guys are structuring your business lives. That's a very big, broad, entire podcast episode, but maybe we give a little recap on kind of what we do and kind of how you do a general structure on it. And then if someone likes what they hear or want to know more detail and specific of something, then we can kind of rip into that.
Yeah, I guess the challenges and time management for dummies. I told Tanner we should break that off.
Got to read that real quick.
I mean, I guess I would say I'm probably more engaged than you are in day-to-day residential sales anymore, right?
Yep.
Like you kind of step back from that. So my challenge is running a sales business, residential resale, traditional real estate business while doing these things on the side. The way I've managed to do it is because I view them very, very similar. I feel like I'm doing the exact same thing, just one I'm doing for client and then one I'm doing it for me. I'm in and out of properties all day.
Yeah.
So I'm in and out of rentals all day.
Yep.
I'm assessing values over here. I'm assessing values over there. So just from a focus standpoint or from an expertise standpoint or whatever, I feel like it's kind of the same thing. Mm-hmm. Now, getting into my time management is a little bit trickier because I think I've been pretty open here in the past saying that I've struggled with that and trying to pivot my attention towards what really matters, which is getting that property off the ground that I'm building, which I'm 6 to 8 months behind purely because of my own doing. The market's been crazy here. I've been stretched thin, so I haven't been able to focus on that.
Yep.
So how do I balance it? I'm trying to, right now I'm probably 80% sales still and 20% property management, which is foolhardy and shouldn't be. It just happens that I'll do property management for, as much as most people do a full-time job, and then I just work a lot of hours in my main lane as well at the same time.
Yeah,
but you kind of have stepped back a little bit more. How are you managing? Because you run a few businesses.
Yeah, well, so just to quickly recap on yours. So you structure, your main business is being a real estate agent, and you kind of structure things around that.
Yeah.
You're transitioning a little bit into the development side in the sense that, not a little bit, that you have lots of land, lots to build, lots to do, but it's still primarily your time is focused on being a real estate agent.
Yep.
And then it's becoming kind of almost an after hours and side thing to run the properties and work through that, which is, I think, very common for a lot of agents. And everyone takes it to a different level. Again, you're taking it to a level that I think will ultimately become your development will become the main
thing. Yep.
So, yeah, mine's a little bit different. So I came into this already having a little bit of business stuff going on. So I started actually with a contracting company before I ever got my license. So I had a contracting restoration business. So we do work for insurance companies. So if you have a fire, flood, mold, any of those kinds of things. So that's where I started with like a formalized business. I had a bunch of little businesses. I talk about that in episode 1 on how I got started. Those, like, the progression was made and I just dropped those businesses off. They were never big enough to really sell for anything. They were more just personal businesses. The time it became like a real business is when I got into the contracting side of things. At that time, I was already flipping houses and had some rentals. Again, that was just a very small business. It was me running it myself. I was very hands-on. I was doing a lot of the stuff myself. So things weren't too crazy. I handled everything on my own. Once I started the contracting company, I was still actually in university at that point. It was a franchise. I bought it. They had so many requirements and rules. That's when I had to build out and get administrative and project manager and have other people involved.
Kind of a blessing in disguise when you think about it. Think of what you learned having been required to do that.
Yeah.
Right?
Yeah, it was. I don't like discredit the franchise. They taught me a lot about business and things that you should do and best practices and how to get things in place and systems. And so it did that for me. So by doing that, I realized that, hey, look, like I got to the point where there was job sites I'd never been to, and we went through the whole project. We did it. I got a check at the end. Customer was happy, and I never had to be there. And I don't want to say I got high on that, but I kind of did. And I was like, you know what, this is what I always wanted. Like, so then when I got my real estate license, I did that as like kind of a means to buy more real estate and to kind of fill my time, because as a contracting company, I don't physically need to be there. So I did. I was fortunate with the timing, and it grew really big. So not really big. It's not nearly as big as Chandler, but like for me, it was great. But so I built that up, and it took over a big portion of my time. But honestly, all I did was I structured. So like that was my priority, is selling homes and rentals. And then on the side, I had my contracting company, and I had my own property purchases. Now, in the last year, I've made a big shift in the sense that being a residential agent, I've kind of put that on the back burner. I still proudly will say I'm a top producer, but I'm not as prioritized on that in the sense that I've tried to take control of it. I'm a little bit more choosy on who my clients are. I have other agents that I will pass portions of my deals to, and that's giving me more time to work on my rentals. And that's how in the last 2 years I've gone from 5 units to 85 or whatever it is exactly now units, is because I ended up shifting my focus a lot. Just because it was something that maybe I enjoyed more and I liked having a bit more control over. And so the way I kind of structure my day-to-day is I've put priority on growing that business while still running the real estate agent business. So I don't put a ton of priority on growing that one. And I'm actually transitioning now into commercial. So I'd like to reduce my end count and go to more, I guess, high number ends in the sense of like, okay,
high yield, low
high
numbers,
yield ends. Yeah. So it's a $100 million building versus doing $100 million in houses. And it's not purely because of money. I like the challenge. I like to change things up. I'm very much a person who changes it. So now I structure myself that my priority, my number one business is my real estate that I physically own, my developments, those things. Then I also have the commercial agent and the residential side. And then the contracting still kind of sits on the side. Unfortunately, that business, I realized as I went on, and this is something we talked about last time, is what my objective was in life, monetary and freedom-wise. Contracting is a very intensive business that takes a lot of time, and the reward at the end is good, but it didn't meet the requirements of what I needed to in the timeline that I needed to, right? So I found that there was other ways that I could operate, and so I've allowed myself, and I'm big on hiring people. So like I hired somebody to do my property management, hired someone to do the project management, hired administrators, hired assistants, and that's allowed me to kind of have some more free time and still be able to, I say, enjoy myself, because that's what I like to do, is have my free time. So I've structured it a little bit different where I'm constantly trying to step back. I'm always like, I go in, do it, figure it out, then put somebody in that place. Whether that's writing a handbook and putting someone in that place or doing those kinds of things, I want to be able to be traveling somewhere and just check in and make sure that the steps are still being followed.
Yeah, and I think part of presumably why someone would ask this question is because maybe they're toying with the idea of changing from, okay, I've got this 9 to 5, right? And until you replace that income, you kind of need that 9 to 5.
100%.
You need it to qualify for mortgages. You need it to keep your lights on. You need it to provide for the people around you that you're responsible for. You need that. The question is, how do you then balance that time with going out and, say, managing even 10 units? Right? Like if you are spread thin, managing even 10 units can be difficult. The bigger issue I find is, because people all the time be like, hey, man, like, you know, if you ever come, you're a good agent. When you come across a 15-unit building, just send it my way, man. I'll buy it. It's like, yeah, you and everyone else. Yeah. Right? Like, how many times does someone come say, hey, if you get a good deal on a 15-unit.
Every day.
You know, and we're going to say, well, if it's a good deal on a 15-unit, I'll probably buy it. But a lot of that stuff trades hands very privately.
Big time.
So if you really want to switch into acquiring these at some point, you know, you almost have to make that a fuller time job.
Bit of a leap.
You have to make that leap, or at least realize that you are spending all of your off time pursuing those things, because you may have to, you know this, you might have to talk to 15 sellers before you even get one who's maybe interested in selling.
100%.
And then that might take 2 years. So what are you going to do? Sit there and do nothing for 2 years, have no income? No, that means you've got to go out, instead of talking to 15, 20, 30 sellers, you got to talk to 60 and 100 and come back to them and, you know, spread the word out to other people like, hey, if you have anything in this, that becomes a full-time job at some point. The challenge people have is they say, okay, I want to do this. Like, well, if you're not putting in the extra hours of due diligence to find those deals, it's going to be hard to grow. I even struggle with this myself. I'm so committed to doing one thing that I don't have as much time to go out there and shake the trees and find other opportunities. I've got a nice full plate and for the next 10 years from a development perspective, but would I love to come across more deals all the time? Absolutely.
Those big 8 units, 6 units?
Wow, just taking shots here now. No, but there's somewhere out there, there's a 20-unit building that someone would sell.
Yes.
Right. Somewhere.
And it's a deal.
And it's a solid deal and so on and so forth. But do I have the time this evening to do it? No, I got to write an offer and I got to do this. So what you've done well, I think, is have stepped back from that, taken the short-term loss. We talked about this in an episode. Take the short-term loss with the hope of building something else. For people who are not in a position to do that yet, you have to work long hours. I don't know that there's a solution to it beyond that.
Yeah. There's no replacement for working your butt off, which sounds cliche. Everyone says that there's no replacement for hard work, and that's really true. I found that out. We all found that out the hard way.
The secret is there is no secret.
The secret is there's no secret. I think I have a lot of my colleagues that are working full-time jobs that want to get out of the full-time job and run their own kind of gig. And the thing I push them a lot is, yeah, exactly. You need to kind of commit to just working like a dog, and you can't do everything. You can't say, okay, I'm going to now quit my full-time job, start this awesome business, and then live like I'm just living it up. Like, unfortunately, that those things can't all go together. But I say to a lot of people, like you're saying, is so like, okay, I have one colleague right now who's very much in that position. And I'm like, okay, like you have enough money to buy 1 or 2 small properties. Let's be very cognizant of where we buy them. Let's get them as Airbnbs. And I bet you off of those 2, you will net probably almost close to what you're taking home now. And you'll be a little bit less, but it will allow you then to pack out of your job, and now you're full time, and now you can delve in super hard. You can go full time door knocking, and you can make that switch. And you're never gonna do that until you just have to bite the bullet and do it. And so
you have to remove the safety net at some point.
And it's never just simple. It's never like, hey, you just do this, and now you're able to do that. Otherwise, everybody would just do it, right? You have to lose a few hairs.
I think also you need to profile engineer the person that does what you want to be doing.
Yeah.
Right? In the sense of like, okay, the person that I want to be in the life that I want to have for the next little bit, what amount do I need to live off of? And what does that person live in? Right? Like, you've made a practical decision to rent a property downtown for all kinds of reasons.
Yep.
Right? Maybe counterintuitive. Some people are like, well, why wouldn't you buy a house and blah, blah. Like, we'll unpack that in another episode. But, I look at, okay, if I was starting fresh, I could live lean and mean. Like, what would be the first thing that I would do? Well, maybe I would have bought a place and lived in the cheap basement apartment, rented the thing out for a lot or Airbnb above, right?
Yep.
That's the first thing I would have done. Then I would have figured out how many other, be it Airbnbs or rentals, would I need to get there, and how lean could I make my lifestyle?
Yeah.
Like, is $50K the goal that I would need to hit to be able to stop working my other job, live as this individual with these properties to do that?
Yeah.
You have to profile, like engineer a profile of the person that would be that one step ahead of you in terms of quitting their job and being able to do this.
Yeah.
And then from there, profile engineer the next person. Like, okay, now I want a lifestyle of $150,000 a year.
Yeah.
What does that person look like, and what do they do? And then draw out that profile and execute on that.
Yeah.
And that's what things people do kind of subconsciously, but that's what you're actually doing. It's emulation, it's planning, it's goal setting. But think of the person that you want to be. How do they work? What do they do? Does that person wake up at 11 or does that person wake up at 6:30?
Big time.
Right? And that's an oversimplification, but I think that's at least a good starting point.
Yeah, 100%. I think we should definitely do an episode on this whole thing of how you structure your life, how to make the transition into business, and then potentially also growth. Because I have a lot of comments I want to make right now on, like, on top of doing all that, you should be already shooting 2 steps ahead all the time, and you should be setting lofty goals to kind of keep that fire under your butt.
Yeah.
But again, we don't really have necessarily the time to get into that. But
I think we should do an episode that's all on time planning and goal setting, because I think those things go together well, because you plan your time based on the goals that you have.
Yeah.
So I think that'd be a good episode. A couple other things we want to tease about what we might talk about in future.
Yeah. So one thing that's been playing into my head a lot, I'm hoping maybe the same for some other listeners, is economic recession. I mean, we kind of were, it was a topic before COVID, then COVID happened, people kind of forgot about it, but in the sense it was said that we're having a recession, but nobody really felt it because everybody was at home. Some business, I'm not to be insensitive, but there was definitely some businesses that got absolutely rocked and destroyed by it. But then there was also a lot of federal money that went out.
A lot of people got floated.
And a lot of people got floated. And I think for the average Joe, average consumer, I don't think they felt the impact of COVID as intensely on a financial scale as kind of expected.
For what we went through, we were pretty unscathed. No, and that means it's going to sound really insensitive to certain individuals that had on a micro level a terrible experience.
Yes.
But I don't think we
as a whole
appreciate how how it could have been a lot worse.
Yeah. So as a whole, I think Canada and panned out fairly strong in this. But we've had a lot of growth in the last 10 years, and now it's starting to be like, okay, what's the next thing, right? Like, you look at history, every 10-ish years, 5-10 years, there's always been a little bit of a reset or a little pullback, and we really haven't had that yet. And so I'm just with the inflation taking place, the issues overseas, China's new government regulations, like, it's something that's playing on my mind a lot because it's how I'm making my decisions moving forward. So I just wanted to like start unpacking that and kind of make that a topic of conversation for us, because I think it's going to be something that's going to become really relevant for all of us.
Yeah, there were a lot of people speculating that because I think it was around 2008 there was a little pullback, and then 2013 there was a little pullback. So it was like, okay, sometime around like 2018, 2019, there's going to be a little pullback here. And for all kinds of reasons, it didn't happen. And so the question is like, well, did we just kick it down the road 36 months? Is that forthcoming? Which is ironic considering what we were just saying about the housing market and saying that we feel pretty bullish on it. But I think you want to talk about some international factors that might play into this as well.
Yeah, I'm talking like a bigger scale. Like I think like I don't want to say world recession because that sounds insane, but like I'm a little bit on the idea of this might be a literal global recession that we're going to face when it comes down the pipe.
Doom and gloom, Neal.
Yeah.
What else are we going to talk about next episode?
Next episode, we're going to have a very strong mortgage broker on.
Yeah.
We're going to discuss everything regarding financing. We had some questions today regarding that, and we're going to keep it for then and just go over common misconceptions. They can offer some ideas, talk about some different products that are available.
Yeah,
and
practical stuff for people trying to make some moves.
Yeah, just like we talked about when we were talking about buying, you need to have that strong team. This would be a broker that we would consider someone to be part of your strong team that can help you grow and move forward. And so we're going to go over some of the ways that they can do that.
Yeah, it's a good personal friend of mine, Igor. He's done all my financing since the jump pretty well. And he's just a savant with this stuff, man. It's amazing. So we'll have him on and we'll talk about all that.
Yeah, so those are some of the ones that are coming up. Again, comment, subscribe, like, all that stuff. It's super cheesy, but we love all the stuff that you guys are posting. We're trying to get on it. We're starting to get a nice groove going here. We want to thank everyone, too, for listening. Like, it's super exciting for us now to open it.
It's awesome.
And get whatever it is, even if it's 50 views or 100 views, to know there's even that many people is super awesome. So,
and this is Neal's brainchild, right? Like, never stops moving. This was your idea to, say, I want to start some sort of system for a podcast, right? Like, and kind of right along that. It's awesome.
We talked about in the first episode. My idea is to create some sort of community platform and this is the start of it, that we can all kind of work together and help each other and make it somewhere as a place for people that want to get into this business, and any business can kind of grow and learn. I got to thank a lot of my friends though for kind of pushing on it. But
I'd also like to say, if you watch this and you enjoy it to that end, can you like tell someone about it or share it or whatever? Because
that would be huge.
It would be huge. Get more people listening. We'd love to get more people engaged. So
awesome.
I think that's everything. I got to run. You got to run.
Thanks for listening.
We'll talk to you next time.
Talk to you.